What is up? Good morning, everyone. Happy Friday. It is Valentine's Day, actually. Happy 14th here. Hope you're all getting good loving from the market, and myself from the last few Fridays have been getting quite the opposite. Very rough, bad loving. Something that I didn't enjoy. So this Friday, I'm not going to be on the stream. I'm going to take it easy this Friday. Capital preservation to a T. Last Friday, when I was streaming, I didn't have the news up, and this news event slipped me about 65 points on the Nasdaq. So I took about a $1,300, maybe $1,400 loss instantaneously. Got some of it back, but ended the day red overall. And I'm going to take Capital Preservation Friday very seriously this week. The last few Fridays, honestly, have been just super tough. So I'm not going to partake in that. And then we'll be back on the stream, right? Live stream trading next week throughout the week, actually. So I'll send out an email about that. If you're not on the email list, make sure you are. We have weekly newsletters that get sent out. And to join it, check out community.tradeproacademy.com. Our open Discord there grants you access to our newsletter, where we have a lot of information, and we'll have more information, more topics coming out over the next few weeks. But in terms of news, today, reciprocal tariffs from yesterday, that was the main topic of conversation. I guess a headline print that was being made. Reciprocal tariffs, Trump was going to talk about them at 1 p.m. Eastern time. And that is pretty much what we got. With a slight delay, like we saw that reciprocal tariffs did not nuke the market. This is the first time we saw tariffs and tariff news come in without a drastic downside move that just obliterated every support in sight. And they might be here in April, right? That was some of the news. President Trump announced yesterday that federal agencies will first conduct studies on how best to update tariffs on other countries to match the rates imposed on the U.S. before implementing them in April. So it's the president's largest proposed overhaul of the delicate global trade network since he took office. Trump has long promised to put reciprocal tariffs into action, reiterating yesterday that they charge us a tax or tariff, and we charge them the exact same. The president argues that current trade deals, especially ones with South Korea, India, the EU, and others, right, are unfair to the U.S. The average U.S. tariff rate is around 3%, which aligns with other wealthy nations like Canada, Japan. Canada being put in the mix of wealthy nations is kind of comical but fair. And the UK, but much lower than countries like India with about 17%. Some countries have higher tariff rates to protect certain industries. This is especially true in low-income countries like South America and Africa. In South America and Africa, not like. Those aren't countries. Trump specifically named the EU because of the bloc's value-added tax, right, the VAT, and also called out France and Canada for slapping American companies with digital service taxes. So this is a long-going thing, right? From after World War II, even 23 of the most powerful economies in the world signed the agreement, the General Agreement on Tariffs and Trade, the GATT, hoping to supercharge economic activity through international trade. This agreement ushered an era of we're all friends here, cooperation, and global trade, and was eventually absorbed into the World Trade Organization. And for decades, the word tariff made economists and politicians also bristle. But now what we see, that the Trump administration thinks higher tariffs could bring manufacturing back to the U.S. and pay for his proposed tax cuts. Many economists have criticized the plan, saying that it will likely push costs onto the consumers and cause retaliatory tariffs from other countries, which I probably lean on that front of things. And Trump's order of new tariff code is a massive undertaking that will require reevaluating hundreds of countries' current policies in less than 2 months. So the delay instituting the new tariffs also signals that he may be open to negotiation, which is a broad reason as to why the market is taking this in good stride. I think the more that we get all this tariff news and tariff talk, the less and less the market overreacts, right? The first time we saw a massive downside move, huge gap, just destruction, rebid it throughout the week. The following Friday after that, we got more tariff news, market gaps down Sunday, rebids normally, right? It continues like this with smaller and smaller incremental reactions to the downside, where at some point, right, it's going to be very muted. With the continuation of a push of these tariffs actually being enacted, you're going to see that markets are going to take this in a bullish stride, and eventually that really opens up the window for negotiation, where I think that ultimately resolves in more bullish momentum, where I think a lot of money is actually under risk right now in these markets, and we can see a broader tech rally. It's the only thing that's holding this thing from the expansion to the upside swing. So, icky heart day. Happy Valentine's, guys. I love you all. So generally speaking for today, I think that there is some bullish sentiment. This is the first time in a few weeks that we've actually ushered a move through the massive range that we've had, and we're actually trying to close above those areas, honestly. So it's a matter of, can we actually hold the region to get that expansion? Because last time around, we failed from the S&P at 61.45 and 61.60. So those are just below the all-time highs, and as many stocks are trying to usher into all-time highs without tech. So right now, the way I see it is that we want to see a bid from 61.15 area on the S&P. Otherwise, 61.05 is the next expected target for the buy side to come in. I just want this thing to bid above 61.40s to continue that leg higher, but I wouldn't be surprised if we pull down to the 61.15 area, where we could try to catch that bid to continue the upside momentum. The only reason for me to be like super bearish and expect a downside move on this Friday, that's very similar to the most recent Fridays that we've had in the past, or the most recent future, I should say, or recent past. I'm getting jumbled up. The most recent past, meaning the last few Fridays, we've had downside momentum moves, and the only reason for me to be that bearish is to see multiple failures from 61.40, but mainly if we offer 61.05, I think it's going to be done from that perspective there, and we're just going to come back into auctions lower. Otherwise, I do remain bullish. We'll see how far that can get, right? Things can get disrupted very easily. I just want to be careful. Fridays have a knack for larger moves, it seems, whether it's upside and most recently to the downside. So I want to really, really, really be on capital preservation Friday today. So immediately bullish. If we disregard 61.05, that's what opens up some of that bear case on the spoos. Now, with that being said, I hope everyone has a fantastic weekend, and we'll do this again next week. We'll be streaming more, so remember to check your emails, and remember to subscribe to our newsletter or email list. You can find it at community.tradeproacademy.com. So thank you, everyone. Take care. Happy Valentine's, happy weekend, and